From the financial centers of the world, this is Bloomberg Markets with Alix Steele and Guy Johnson.
It is 30 minutes into the U.S. trading day, Monday, October 16th. Here are the top market stories that we're following for you at this hour. Apple's China problem. The iPhone 15 is selling far worse in China than previous versions. Shares down about 1%. And Pfizer's COVID problem. So the company slashes its guidance, takes back almost 8 million Paxlovid doses from the government. The stock is up while peers fall. And the market's bond problem. Yields keep climbing higher. This time, stocks are up as earnings season really kicks off this week. From New York, I'm Alix Steele with my co-host in London, Guy Johnson. Welcome to Bloomberg Markets. Here's your playbook. Buy stocks, sell bonds. That's the play. I do wonder what the catalyst will really be this week, to be honest, Guy.
I don't know what this week's going to be about. Is it going to be about what happens with the Fed and yields? We've got acres of Fed speak this week. We need to wade our way through. Is it going to be about what happens in Israel? I don't know yet. We're all anticipating that we will see some sort of a ground invasion of Gaza. When that happens, what happens? I don't know. Or is it going to be about earnings, Alix? There seems to be so much going on this week. It's going to be hard to pin down exactly what the catalyst could be.
Yeah, it is. And that's why I found the Apple story so interesting overnight.
Yep.
And again, like we haven't talked about China in a while. And the China risk when it comes to certain sectors. And some we know. We'll talk about chips also later on in the hour. And
yep.
The others we don't. And how do you price that in?
And I do wonder whether the earnings season is going to mean that we have to revisit this. Mm-hmm. In some ways, we did so with the LVMH earnings. And we noticed what was happening there. There's clearly a slowdown. Why there is that slowdown, I think, remains an open question. And you bring up Apple, which I think is fascinating, because we've got these reports out that maybe the latest iPhone isn't selling as strongly. But why? And I think it's that latter bit that we still haven't nailed down. Is it just a macro story? Is it something more geopolitical? Is it because actually the product isn't simply good enough? I don't know. But I think the question, and I think the comparison with LVMH is really a useful one. So our question of the day is a fairly straightforward one. Has Apple caught LVMH's China cold? Joining us to discuss, Bloomberg technology co-host Ed Ludlow, Bloomberg's Alix Webb here in the studio with me. Alix, what do you think? We're in a situation where we don't know exactly what the data are telling us, so we're kind of trying to get our arms around understanding what the numbers look like, and then we don't definitely know if the numbers are down, why?
Yeah, so we have a sort of quantitative piece here, namely that Counterpoint Research, reported by our colleagues in Asia on the news side, they are saying that sales of Apple's flagship device are down 4.5% compared with the year earlier period. Now, that is unit sales, not necessarily revenue. So if the mix is towards the higher end, that may not necessarily be catastrophic for Apple's earnings. We have seen a slowing of sales in China. It's not really dropped significantly, but if you look at trailing 12-month sales, there has certainly been a flattening. The key question is whether this is to do with a sort of resurgence of Chinese nationalism and a real gusto going behind Huawei's new headline device, which may not be able to maybe able to manufacture that many units, but is that something that's taking chunks out of Apple? Or secondly, is it just the Chinese economy? And if it's just the Chinese economy, then if that economy recovers, Apple will recover too.
So, Ed, what say you? Because it could really go in many different directions on this. But clearly, anything luxury in China is tough right now. What do you think?
It's kind of a confluence of the macro story Guy was talking about and the market story that Alix is talking about, right? Counterpoint's conclusion is that it is the Chinese economy. And what's analogous between Apple and LVMH is, you know, there is still growth in China. We get GDP print on Wednesday, which is expected to show a modest uptick in growth quarter on quarter, 4.5% growth on an annualized basis, which is below Beijing's target of 5%. But the stories within that are the markets where your iPhone buyers are the same as those shopping LVMH or going over to Hong Kong and shopping Hermes, right? Which is youth unemployment is still very high in China. There has been a psychological shift in the younger Chinese consumer from buying luxury goods to spending on experiences, just like we see here in North America and in Europe. One note of caution on the Counterpoint data, though, is that figure, 4.5% drop over the first 17 days since iPhone 15 launch, is an aggregate of all the variants, 15, 15 Plus, and the 2 Pro models. And historically, Chinese buyers have been driven by technology upgrades, which the Pro and Pro Max tend to have, raising ASPs and revenues, even as Alix points out, if unit sales fall or plateau off. And so Apple always surprises us with China, and that's worth bearing in mind.
Yeah. Ed, what is the situation elsewhere around the world? Because it's interesting, LVMH has talked about the fact that they are seeing a slowdown in North America, yet the data I'm looking at seems to suggest that actually Apple's new phone is selling well in North America.
A beautiful story where all of the data contradicts itself on a quarter-on-quarter and year-over-year basis. Fantastic. But yeah, the Counterpoint research data shows that in the US on that same, well, they go for 9-day period from launch of the iPhone 15. Sales are up here in the United States. Again, there's a sort of upgrade cycle story that there's evidence that the North American consumer had been holding out for multiple generations to buy a new iPhone. And Guy, you know, I don't know where you're at with your iPhone buying strategy, but
he has
went and got
iPhone buying strategy.
I know.
He has not a one.
I couldn't resist the temptation, but I went and got iPhone 15 Pro, and the technology upgrades were substantive enough that I did that. Of course I did, but my prior phone was a 12, not even the Pro, just base version. I just go back to the data gone, which in the quarter ending in June, China was the strong point for Apple amid smartphone market weakness, right? They swung to an 8% top-line gain. And again, if you look at the commentary from Cook, it was the iPhone that drove that. And the guidance, soft as it was that iPhone sales would accelerate into the final 3 months of the year.
Just so everyone is aware, Guy has 2 Samsung phones. Not 1, but 2. No Apple
Doubling
phones.
up.
Just want to be very clear. Alex, I feel like
peer pressure is enormous.
Yes, it is. It's true.
It is.
Alex, well, what I find different, though, than, say, when we're comparing LVMH, is the nationalistic tendencies when it comes to smartphones, that the homegrown smartphone may hold more appeal in China. There is no homegrown luxury bag. Can we just talk through kind of how that's evolving in China when it comes to the iPhone?
Yeah, luxury goods aren't, at least not yet, they're not geopolitical, whereas we have increasingly seen that with technology products. We've seen the US, the Commerce Department really crack down on the ability to sell particularly high-end chips into China. China is sort of, it looks like they're finding ways to push back on that, right? So they've banned now the use of iPhones in government-owned enterprises. They've also cracked down on some US chip makers, but in spaces such as memory chips, where they're not really at the bleeding edge and China has its own competing products. The concern right now is Apple getting caught up in that crossfire? And if so, then how long could that last? We should have a caveat to this. Like, you know, this did happen previously, where there was a certain resurgence in Chinese nationalism in 2018. We saw local brands like Vivo and Oppo take a real boost. It didn't really last all that long. We saw a resurgence in Apple sales there. So, you know, with any of these things, we don't quite know how long they're likely to last.
But the risk is greater. Back to the LVMH comparison, as you say, there isn't a geopolitical risk attached to an LVMH handbag, whereas there is to the iPhone. How do you therefore price that risk in? We don't know, but you have to a certain extent, price that risk in. How do you price in the risk of local phones getting better, concerns about kind of people wanting to be seen with an iPhone, and maybe that does have government implications? How does the market think about, should the market think about this?
I mean, look, as Ed points out, Apple somehow always manages to pull the rabbit out of the hat. Right?
Yeah.
And the thing, actually, if you look at their business in China, they tend to do a greater operating margin there than they do in the US, which suggests they're able to sell, as he says, higher-end products. They're able perhaps to sell a few more services, which is particularly interesting given the sort of penetration of WeChat there. You know, plenty of people, no matter how generously Apple is priced, will say that Apple is still priced at a discount. So maybe it is already priced in to the Apple share price. You know, it is still growing. It is still posting, you know, huge free cash flow on any given year, even with some of the tribulations that it faces.
No, fair enough. And we can see that when we take a look at, say, the big 5, they're still doing really well and are sort of looking for earnings season. They're going to be the drivers, right? Okay, guys, thanks a lot. Really appreciate it. Ed Ludlow, Bloomberg Technology co-host, and Bloomberg's Alix Webb. We appreciate you breaking this all down for us. I feel like when Guy gets the iPhone, that's going to be the top for Apple.
That's going to be a huge. Well, no, that will absolutely be the peak.
That's what I'm saying.
All my family have iPhones. All my family have iPhones. The pressure is definitely mounting.
Yeah.
I'm going to ignore all of you lot. You lot give me sort of daily grief about my Samsung ownership, but when my family finally decides that I need to get one, that's the top of the market.
That'd be peak iPhone. All right, guys. So coming up, it's more than a question of the day. Has Apple caught LVMH's China cold? How do you price all this in? Lori Calvasino, RBC Capital Markets head of U.S. Equity Strategy, joins us next. This is Bloomberg.
a lot of this is whipsaw.
We've been watching these rise in bond yields.
What we're seeing is this enormous volatility.
We're just going into a more volatile world.
We have lost all anchors to the bond market, all of them.
It's not just been the bond volatility of the last 7 days. It's really been the bond volatility of the last 3 months.
The economic anchor, we have lost a technical anchor, and we've lost a policy anchor.
The rise in the long end yields, if anything, was doing the Fed's job.
The Fed is probably done raising interest rates because they realized that the bond market's been recently doing all the heavy lifting.
What level of of rates and financial conditions, do we really need here?
The bond market is looking ahead and figuring out that the Fed indeed is getting it right.
The economy does not weaken, then the path of least resistance for yields is higher.
Those were some of the Bloomberg TV guests earlier weighing in on the volatility in the bond market. So let's get to the question of the day, and we're kind of wrapping this all in here. Has Apple caught LVMH's China cold? Here with us is Lori Calvasino, RBC Capital Markets head of U.S. equity strategy, recently upgraded her EPS forecast. She's lifting the firm's earnings forecast to about $2.23 for this year, also upgraded it by $3 for 2024. Lori, we'll get to that in a second. Just focusing on the Apple story here. Do you think that Apple has caught China's LVMH's cold? And if that happens, kind of what does that wind up meaning for the market?
So I can't comment on Apple specifically, but I do think just the extent to which we had complacency on China to start the year, and frankly, as recently as sort of the kind of April-May timeframe, was really just remarkable. So it's not surprising to me that it's going to take some time to see that complacency unwind. And one of the things we've been tracking really closely on the funds flow data is just watching inflows into China equity-focused funds, and those have really been slow to turn negative. We actually saw them come off a pretty, high peak, and they've been slowly kind of making their way back to neutral. But the deterioration there even hasn't yet manifest into outflows yet. So I think there's still some room for this whole love of the China recovery story to unwind, even though it seems like we've been talking about it for a while now.
More broadly, Laurie, good morning, it's Guy. Do you think that high-end discretionary company stocks have an issue right now? Apple and LVMH in some ways are the ultimate high-end stocks. With the consumer in the kind of shape that the consumer's in right now, is this an area you want to avoid?
So I think you can look at it from two ways. I think first off, it's perhaps one of the latter dominoes left to fall. If you look through the company commentary over the last few months, I mean, or for the last few quarters rather, it's really been a bifurcation of the high-end consumer versus the low-end consumer. And generally, we've seen some strength in that high-end consumer. I'm not seeing anything yet that tells me we have to watch for the high-end consumer to fall off a cliff, but certainly that is the area that we haven't really seen that erosion yet. There's a lot of concern about the consumer. We're seeing all these claims that the excess savings have been worked down. I push back on that a little bit and say, look, the buffers around consumers in the U.S. in particular, I think are really underappreciated. But certainly, I think that is an area where as people start to, kind of price softness on the economy back in, perhaps the pendulum that we would avoid a recession swung too far. But as we swing back to the idea of baking in some risk to the consumer, that's certainly where people are going to be focused.
Yeah, and sort of what the downside is there. I should point out that Lori gave Guy some considerable shade about owning 2 Samsung phones in the break. I just want to put that out there. We all agree that would be the peak. Lori, so the top 5 big tech guys like Apple, Microsoft, Google, Amazon, NVIDIA, we're still looking for solid earnings. And it feels like that is what's going to be propping up overall S&P earnings. That's what some strategists are talking about. What do you see? And we have to start pricing in the kind of risk we're now talking about. Does it change the scenario for the overall index?
So look, I think the way that the Magnificent Seven, the Big Five, whichever ones you want to focus on, the way that goes, that is going to have an important ripple effect on earnings and S&P 500 price action. The presence of those stocks in the market cap weighted indexes is just too great. And we do know that big tech companies have really been propping up margins in the S&P for quite some time as well. So we obviously care about them. I think the real issue for me is not necessarily looking for those companies to fall off a cliff, but rather to have some competition on the earnings front. So when we go back to the first half of the year, those kinds of companies, the growth part of the market was really the only game in town in terms of where you were seeing excitement around earnings, where you were seeing upward revisions. Well, guess what? Now we're starting to see upward revisions to energy companies. That's really been a change that happened around mid-year. You went from negative to positive revisions, and financials are actually starting to see a tremendous healing in their earnings revisions. They haven't really flipped positive in a major way yet, but they're really headed back in the right direction and showing some recovery there. So I think that's really the threat to tech going into next year, is not that their earnings necessarily fall apart, but rather that there's some competition.
In terms of this earnings season that we're about to see, where should I be focusing my attention? Is it on the top line? What's going to happen there? Is it in the middle of the P&L? Kind of, we are going to see some margin recovery as maybe costs come down. Is it going to be the bottom? Just kind of walk me through, in the light of your EPS call, kind of where you see the narrative shifting.
So, look, I think revenues are obviously going to be in focus. Every time we go into a reporting season, myself included, we're all laser focused on demand, whether it's on the corporate side or the consumer side. So that's one area you've got to pay attention to. If recessionary fears do really come back and we start to see a real degradation in the demand environment, that's going to hurt your revenue line. I think the other issue, though, is looking at margins. And I think one of the big differences between my numbers for next year, which is still a recovery year, right? It's just not as great of a recovery as consensus is anticipating, is that I'm kind of looking for a return to 2022 type margins based on my modeling. And the consensus is really looking for a heck of a lot of margin expansion. And I am somewhat skeptical you're actually going to get that, because I haven't seen sort of any kind of analysis that tells me when inflation comes down that margins expand. I just don't see that in my modeling. What I do see in my modeling is that as inflation comes down, revenue growth gets dampened. And so we've got that baked in. I think people are starting to understand the impact of eroding inflation on pricing power. You're starting to see that come up in company transcripts. So look for that conversation to continue, but also look for a deeper discussion on really what's going to happen with margins next year and how the pricing versus cost dynamics play out.
Well, but also part of your call, not only is inflation will come down, but that rates won't stay at these levels either. That goes against the higher for longer thing. So what are you seeing that everyone else isn't?
So in our earnings model, we're actually pulling in the consensus forecast on interest rates, which is still baking in some relief on the 10-year yields from where they are, and also, really baking in a couple of cuts in terms of the Fed expectations for next year. So that's really the economic consensus that's out there. We made the point in our note, there is still time for that to change. Now, that is not the biggest driver in my model. Really, it's the revenue line, it's the margin line. But interest expense does matter, and that's where those interest rate forecast assumptions come into play. I think we've got interest expense relative to sales modeled for about 2.5% this year. That's basically where it's tracking now. We have it coming down a little bit next year to kind of 2.4% for the year as a whole. So we've still got some pressures baked in there. Obviously, if the Fed moves more, then you're going to see that number come down. If the Fed, kind of comes in higher than where consensus expects the cuts to be, that's going to pressure that interest expense line as well and bite a little bit more on the earnings side.
Laurie, I'll let you know about the iPhone thing. We'll see how that one develops. One of my Samsungs is beginning to run out of steam a little bit, so there could be a big decision coming up. Laurie's quite unequivocal in which direction I could go here. Laurie, lovely to see you. Thank you very much indeed. Always great to catch up. Laurie Calvasina of RBC Capital Markets. I'm under a little bit of pressure now. Okay, still ahead. US plans, sweeping measures to restrict China's access to advanced semiconductors. Details on what is happening in the chip war next. This is Bloomberg.
It is 22 past 7 on the West Coast. We want to get to the startup, where we cover the top tech stories from the Bay Area and beyond as Silicon Valley starts its gorgeous morning. Joining us now here on the East Coast is Bloomberg Technology co-host, Caroline Hyde. All right, Caroline, we want to talk more about China in relation to the chip sector. Ongoing story here, but there are more restrictions now?
Yeah, and it seems as though they could be announced as soon as early this week. This is all coming from reporting from our Washington team saying, look, ultimately, the Biden administration last October put in restrictions to ensure that basically China couldn't accelerate their own chip of innovations. But look, they did. We understand the teardown of the Huawei phone that had this very a technologically advanced 7-nanometer chip within it that many had thought they wouldn't have had access to. How have they got that? Well, basically, these restrictions imposed last year just weren't good enough. And so now they're looking in particular at AI development. So you're looking at accelerators, which are used in data centers to train AI, but also intermediaries. Basically, how are we seeing ASML in the Netherlands, a chip equipment company? How are we seeing other providers that haven't been basically scooped up in these restrictions still be enabling certain Chinese players, particularly SMIC, the chip player, and Huawei, have access to such technologies?
Caroline, do US authorities believe they can ever stop the trade? Is this what is the ultimate objective here? Is it to throttle it back? Is it to stop it? I'm just kind of wondering how this is going to work, because clearly this is going to be a game of cat and mouse, and generally the mouse gets away.
I think many have felt that they haven't been effective since last October, and this is exactly it. Whether or not they wanted to restrain ultimately the Chinese military having access to such development seems to be what the experts are saying. And look, if already the cat is out of the bag from this so-called cat and mouse game, and we are seeing that they're able to develop very highly sophisticated chips, then maybe it's too little too late. Also, you have corporate America pushing back against these. We know that certainly NVIDIA has said, look, ultimately is a restriction of trade the right way to go about this? You're just going to be forcing China to fast forward their own ability and local capabilities. And certainly that's been an argument made by Netherlands-based ASML as well. So I think many feel that this is very difficult to truly achieve. But I think with Republican pressure coming on the administration, they have to be seen to be doing something, Guy.
Which is such a good, interesting point. It begs the question, like, how far up the supply chain do you go? Because if you go all the way up, it's impossible to, like, separate chip manufacturing and chip technology from one country to another. It's the same way if you're looking to go up the supply chain for, like, energy transition, which is something that I look at quite. I mean, you can't do it. So it depends, like, where you put the stop sign.
Precisely. I mean, at what point are we going to start to go into the very making of a wafer that's within the chips? And I mean, when the whole of the EV area is dependent in large part on some of the rare earths that are coming from China, the tit for tat and the politicization. And certainly you've already got China coming back and saying, look, if you are going to be up in the ante here, we do not like the weaponization, the politicization of trade and technology at this heart.
Caroline, great stuff. Looking forward to the show a little bit later on. Bloomberg's Caroline Hyde, Ed Ludlow, Bloomberg Technology coming up in, just over 90 minutes' time. What are we going to be talking about next? President Biden is considering a trip to Israel as part of a diplomatic push to prevent this war from spreading across the Middle East. We are going to have the latest, Alex, from Tel Aviv. We're going to have the latest from Washington. I'm hoping we're going to be able to go to Tel Aviv for the latest. Obviously, that situation a little bit more fluid. Alex, the critical question now is also what is happening at the southern end of the Gaza Strip. Some really difficult situations developing there. And I think Israel and Egypt have got some very difficult questions to answer right now. But I still haven't figured out what impact this is having on the market today.
Right. Well, and I think that goes to the farther question of how much does this wind up spreading and pulling more countries into its sphere. And it feels like in many ways that's why Secretary of State is going back to Israel to prevent the widening of this. So we're sort of going to break through all of that in the next segment. This is Bloomberg. We're about an hour into U.S. trading session. Yields higher, but so are equities, and tech is actually outperforming. Simone Foxman is tracking these moves for us. Simone?
Hey, Alex. Yeah, we're seeing diplomatic efforts really ramp up to try and limit the fallout from this war in the Middle East between Israel and Gaza. And we're seeing that reflected a little bit in some of the enthusiasm in the market today. We're looking at S&P 500, NASDAQ, both higher after 2 days of losses towards the end of last week. We're seeing bonds falling, particularly on the long end. 10-year yield up close to 10 basis points now in today's trading. We're also seeing oil fall after that real rally last week, now down to 86.66 a barrel. If we flip up the boards, we're also paying a lot of attention as we head into earnings season. This week, not the big week, but we will see some bank earnings, both from some of the remaining major players on Wall Street, as well as some of the regional banks. And then we'll also get some news from big tech next week. $15.8 trillion worth of earnings represented. Now, there's some real disparity when you look across Wall Street at what's anticipated. Bank of America talking about how 11% of the S&P that's reported so far, earnings, sales, all of those things have come ahead of Q2 as well as historical guidance. But Citigroup says downgrades outpacing upgrades already. JP Morgan sees that trend continuing. Now, one space we're going to be particularly watching for some of these earnings results, and a place we're seeing a lot of heavy trading today, is healthcare sector. We see the likes of J&J, Elevance, which is Anthem, Abbott, all reporting later this week. Those are going to be really big names. We're seeing the healthcare index a little bit higher. Part of this on enthusiasm around Pfizer. Though the company made dramatic cuts to its guidance for the full year on weak COVID demand, a lot of analysts believe we may see an end in sight, but Moderna shares really taking the hit on the brunt of that news. Also watching Eli Lilly, we're seeing shares a little bit higher as it came out with new results from its phase 3 trial of Mounjaro, reporting about 21% weight loss in obesity and weight loss patients. Remember, there's some very important studies going on here about the impact on the health of people who are not necessarily diabetic but are taking its blockbuster drug, Mounjaro. Alex, Guy?
Simone, thank you very much indeed. Simone Foxman on what's happening in these markets. Let's turn back to the geopolitics. President Biden has cancelled a trip to Colorado. He was meant to go there today. He is very much now focused on what is happening with the national security situation. The White House says the president is considering a trip to Israel in a bid to prevent the Israeli-Hamas war from spreading. Let's talk about this situation and deal with the various areas we need to focus on. Oliver Crook is in Tel Aviv. Anne-Marie Hordern is in Washington, D.C. Oliver, let me come to you first of all for the update. We are anticipating that there will be an incursion by Israeli forces into Gaza, that there will be a ground offensive. We're all waiting for when. Do we have any visibility on when that is likely to happen, and what is delaying that operation at this point?
Guy, we don't really have much visibility on that. And, coming into the weekend on Friday, the Israeli Defense Forces were saying that basically there had not been a political decision yet made about whether or not there would be an incursion, though it's been widely expected. But the difference is over the weekend, they said that the next stage of this war is going to be from the air, from the sea, and from the land. Now, what exact form that takes, we still don't know, and the timing we really do have very little visibility on. One can speculate, but it's probably safer not to do so too wildly. But there are going to be world leaders here. You have Blinken is here right now. We expect Schultz to come tomorrow. If Biden could come, could that put on a sort of a slowdown on the possibility of a move in? But of course, Guy, the focus is also on the north, where we've had more skirmishes on the border with Lebanon. We understand the Israelis have evacuated all civilians 2 kilometers off of the Lebanese border. So again, this has huge spillover effect, and that's really going to be the kind of main objective of Blinken and others to try to contain.
Emery, we'll get you in just a second to that point, but Oliver, you're in the middle of Tel Aviv. Can you just tell us what it's like there right now?
Yeah, so I've been here since Wednesday, and I was, in Tel Aviv about 7 months ago, and the contrast is extremely stark. Well, for one thing, there were huge protests every single weekend. For months, there's been a huge acrimony within the political system here in Israel. That has, of course, completely evaporated under solidarity. But in terms of, starting Friday night, we've had air sirens go off a number of times. We had one just a few minutes ago where we all go sort of into the shelter. We hear a series of explosions. That's usually the Iron Dome knocking them out. Sometimes we don't hear anything. We just hear an explosion. That often is a rocket that has just gone to sea that they don't bother shooting out of the sky. But again, the Iron Dome, as impressive as it is not perfect. It has a success rate of about 90%. And I was just talking, as the strike was going on in Tel Aviv, it was also going on in Jerusalem. And our cameraman here said that a bomb fell about a block away from his house. So everybody's been in the shelter, everyone is safe. But again, this is the situation now on the ground.
Yeah, and this is a situation that potentially the President of the United States may be entering. Anne-Marie, what is the risk and what is the reward for President Biden to make a trip to Israel right now?
Well, this first leaked out in the Israeli press, and then we have reports confirming here at Bloomberg as well that the president is weighing this. So the risk would be if he didn't go, what does that mean? That now this is out there in the sphere. Does it look like he is backing down? The reward for the president would be to make sure that he is standing, as he said he wants to do, shoulder to shoulder with Israel and showing in a very forceful way the U.S. support for Israel. And at the same time, it would be a huge show of deterrence to the wider region, most notably Iran. It would say you do not want to get involved in this conflict. The United States really wants to see this conflict contained along the Israel and Gaza border with Hamas. They are going to support Israel. As Oliver says, we expect this potential ground invasion. But obviously, at the same time, they want to make sure that this does not spiral out of control. It's why the U.S. has now 2 aircraft carrier groups in the Eastern Mediterranean. One is on its way. The Eastern Mediterranean at this moment is armed to the teeth, which also could mean that they were planning that maybe the president to go there, and that's why they potentially sent the second one, is what I'm thinking.
Anne-Marie, what will be Secretary of State Blinken's goal going back to Israel today?
Well, I think Secretary Blinken is squarely focused on this Rafah border crossing into Egypt from Gaza. You have the UN talking about a ton of humanitarian aid from Egypt that is waiting to get into Gaza that is desperately needed. If you look at the UN report about what is going on in Gaza, the humanitarian situation is dire right now. At the same time, there are a number of Palestinians that live in Gaza that want to evacuate. They want to leave and go into Egypt. And this Rafah border crossing was supposed to be opened as per Secretary Blinken's meeting after he left Cairo with the Egyptian President Sisi. But there's a lot of reports that this is actually not happening. So the highest levels of diplomacy are trying to work out what is going on with this border crossing. But at the moment, it doesn't seem to be open. I think that is one of the biggest concerns right now for the Secretary of State as he makes a second trip to Israel this week.
Oliver, what would the Israelis like to see happen at Rafah? There is obviously concern on the Egyptian side that they could see significant numbers of Palestinians crossing the border and ending up in northern Sinai. What would the Israelis like to happen there?
I think it's very hard to know right now, Guy. I mean, I think that we've had reports of, for example, the Israelis potentially switching on some water in the southern part of Gaza. You know, Israel is responsible for a certain proportion of both the water and the electricity that goes in there. But again, what needs to be very clear in their consciousness is, I think, a message that we got from Blinken last week, as subtle as it was, the number one message from all the U.S. officials, we had Chuck Schumer here, Mitt Romney here yesterday, was all unflinching support for Israel. But what Blinken said last week, and has got to be present in the minds of everybody, is how Israel goes about dismantling Hamas. The how is critically important. Yep. And Mitt Romney yesterday said that basically anything that has happened, all the images you see out of Gaza are Hamas's fault. That is not the view of many of the Arab states in the region. It is certainly not the view in Tehran, and is not the view by Hezbollah.
And how do you separate sort of the war hostages and then the humanitarian effort all at the same time? Guys, thanks a lot. We appreciate it. Oliver Kirk joining us in Tel Aviv. Please stay safe. And Anne-Marie Hardern joining us in Washington. Let's stay with geopolitics for a moment. The Washington Post is reporting that the U.S. will ease sanctions on Venezuelan oil for freer elections. Now, I don't really know what that means. I don't know what freer elections might mean, but the idea that there may be some oil relief, and this comes as there is tensions in the Middle East, and oil continues to grind its way higher. On that news, oil is off by a full 1 percentage point. So we're keeping our eyes on that headline. Washington Post reporting that the U.S. will ease sanctions on Venezuelan oil for freer elections. All right, coming up, going back to the equity market, pharma giant Pfizer slashing its financial forecast as Uncle Sam sends back close to 8 million Paxlovid doses. Stock is up. We'll get those details next. This is Bloomberg. This is Bloomberg Markets. You are looking at live pictures of the principal room. Coming up this Thursday, Fed Chair Jay Powell in a conversation with Bloomberg Wall Street Week anchor David Weston. That's live, Bloomberg TV at 12 p.m. Eastern. This is Bloomberg. Pfizer stock up today. Here's the news. It is cutting its guidance after agreeing to take back Paxlovid doses from the U.S. government. Now, remember, Pfizer was one of the darlings of the COVID era. So for more perspective, we're joined now by Evan Sigerman, Director of Biopharma Equity Research at BMO Capital Markets. He has an outperform rating on the stock with a price target of $33 a share. The reason why this story spoke to me so much is I had to wonder, does COVID no longer matter? And that's why the government's kind of giving back all these doses. What did you make of the news today?
I think there's a few things going on. One, I think COVID still matters to an extent, right? There's still COVID existing. There are people who take Paxlovid, and there are people getting a vaccine. I think there was a big disconnect between what Pfizer thought they would sell this year and what is actually being used. I also think a little bit of a nuance here with kind of the give back is that I think the government wants the NDA labeled versions of Paxlovid versus the EUA, emergency use authorization versus a fully approved drug. But bottom line, probably demand is less than Pfizer and the government thought. The government doesn't want those unused doses on hand.
What is the long-term picture for this product? What is its usefulness? What are we going to use it for in a year's time, 5 years' time? Is this something that Pfizer, once it gets through this little bump, can actually turn into a highly profitable, highly productive product?
That's a good question. I don't know if we know the answer because I think there's always going to be a need for an antiviral against COVID, the virus that causes COVID. But just depending on how much virus circulates. I liken it to a little bit of like Tamiflu or Xofluza from Roche to treat the flu. Sell $1 billion per year of it, but it's not a huge blockbuster driving Roche's P&L.
Well, but it also feels like the upside here is that then Pfizer gets to sell Paxlovid at more market price. They'll make more money when they sell it. But don't the people that need Paxlovid are the ones that are on Medicare anyway, which the government picks up at a discount?
Essentially, yes. And I think, what's happening is they have the product give back, but then in future years, the government can kind of use it as like a store credit to get more doses of Paxlovid for government, government programs like Medicare and Medicaid. I think, I think there will be use. You'll see some use in the commercial market, but it's not driving the Pfizer P&L in 2024 and beyond.
Evan, how much of this is really news? Didn't we expect that there would be this kind of work through? Is this really new news? Well,
I think there is some new news, and the new news is that Pfizer's kind of waking up and smelling the roses and aligning their expectations with reality. If you go back to the second quarter earnings call, there was a lot of uncertainty around the demand for COVID products, including the vaccine and Paxlovid. And the CFO even hinted that if demand didn't shake out, they would do cost cuts. So it's a more kind of follow through of what they had already hinted. But I think the new news here is just the government give back and the realignment of the contract.
Yeah, fair enough. It is weighing on like Moderna. So it feels like it's weighing on the guys that are just solely focused on the COVID era and don't have the pipeline, the real pipeline going yet. On that end. Hey, I want to get your take because we have you on the Ozempic craze. I keep reading research note after research note, you love it, that talks about how all the snack guys or the yogurt guys or the retail guys are talking about how this is going to affect their business. Does this have any teeth to it yet?
So, I cover Lilly, for example, and Pfizer also has an obesity product in development. I think what I'm focused on is I think it's too far to, make, assertions to the broader kind of consumer product market. What I'm focused on is the upcoming potential launch of Mounjaro, tirzepatide, and obesity and what that looks like for Lilly stock. I think you'll see demand take off. Probably too early to say if it's really going to have an impact to what we eat and what we consume kind of on an aggregate basis. Remember, these are serious drugs for patients who have serious metabolic disease.
Long term, though, how big do you think the potential market is? How far could this go? This feels like the AI craze from earlier on this year at the moment. Everybody's trying to figure out what the ultimate impact will be. AI is going to impact all of our lives. Will Ozempic ultimately impact all of our lives?
Well, it's not just Ozempic. It's Wegovy, Mounjaro, and other drugs in development. I don't know if it's going to impact all of our lives. It's going to impact patients who have BMIs of 27 plus, 30 plus, who are obese and need help. I put out a big report back in September looking at this entire market. And we think the obesity market alone, not diabetes and adjunctive indications, could be greater than $70 billion in the United States, $100 plus billion globally. So this could be a huge market, probably one of the largest in pharmaceutical history.
Wow. So this raises the interesting question, because if we kind of pair it with AI, and I realize you're not a tech analyst, but it feels like when NVIDIA came out with some serious AI numbers and some serious revenue numbers behind it, all AI stocks moved higher. And any company that mentioned the word AI on their call, like, weirdly got a boost. This earnings season, do you feel like it's going to be the same for the pharma companies? Like, if you say the word weight loss drug, does your stock go up?
Guess what? Every time these companies have said the word weight loss drug for the past 2 years, we've seen stock movements. Or stock movements to the downside when Pfizer discontinued lotiglipron, which was their once daily oral GLP-1 for obesity. So we've been seeing that already. I think what's going to be most important is once Lilly actually launches Mounjaro, tirzepatide, and obesity, seeing the numbers that they put up and seeing what that market actually looks like. So, the kind of assumptions become reality.
Evan, it's going to be fascinating to watch. Thank you very much indeed for joining us. Evan Siegerman.
Thank you.
Joining us on the Ozempic, the weight loss story, and, of course, obviously, what is happening with Pfizer as well. That stock moving in the market today. Alex, you talked about the yogurt story. The yogurt story apparently could end up being good for stocks like Danone, because apparently the latest is that high-fat yogurts are good for you. You want to eat them more because it has an impact on blood sugar regulation. So there was a note out earlier saying, actually, it could end up not being a negative for some of these companies, but a positive.
But this is what I don't understand. Like, trading the pharma guys is one thing on whether or not you have it in your pipeline. But getting a clean read on all of a sudden you're having the weight loss drug and then you're going to eat more yogurt is bananas. Like, I don't know how you draw that kind of line yet. When we haven't seen the evolution of what this looks like.
I don't know what the banana story is going to be, but maybe it has an impact on that market as well.
Maybe. Go long bananas.
We'll see. Nestle is going to be out with numbers in a few days' time. We'll get the story from Verve. Anyway, coming up, we need to talk more about what is happening on Wall Street in a little bit more detail. Goldman Sachs' Mark Nachman on a crucial mission. This is today's big take to basically stir up excitement over Goldman stock. What is that going to look like this week? What it's going to look like over the next few days? We are by no means done with bank earnings season. Details to follow. This is Bloomberg.
All right, time now for Wall Street Beat. We take a look at what's buzzing on Wall Street and the world of banking and finance. And today, there's really just one story. We're going to take a look at Goldman's global head of asset and wealth management that's really looking to fire up the stock. Joining us now is Bloomberg's Sri Natarajan, who did this story for Bloomberg's Big Take. And this basically is a whole, we're not talking about its consumer unit, we're not talking about markets, we're talking about money management and how that could really change the game for Goldman. What did you find out?
And that's important because when you look at Goldman Sachs today, there really are two important legs to the stool. One is the investment bank. Everyone knows Goldman's investment bank and its strengths in trading and investment banking. Their managers might argue that the market's not valuing it properly, but even if it were to value it higher, it's not going to radically reshape Goldman Sachs and how it performs in the stock market. However, there is this asset and wealth management side. It's about 2.7 trillion in size, and Goldman's making a real pivot there, going away from its balance sheet bet, trying to become an asset gatherer. And the man tasked with it is Mark Nachman, who I would argue, and many others do inside the firm, is the third most powerful person there right now. Behind the CEO and behind his deputy, John Waldron, Mark Nachman's the only one who's run trading, who's run investment banking, and now has this critical mission, because if he can really grow this business and show the market that there's value in it, that he can continue to grow it in a very predictable and reliable fashion, then the stock market multiple could actually catch up with its top rivals like JP Morgan, like Morgan Stanley. What does that mean for Goldman Sachs? A stock that's trading at about 310 today, if it had JP Morgan's multiple or even Morgan Stanley, that's $450 a share. That's a big gulf, and that's the gulf that they're hoping to bridge.
So, Sri, Solomon's legacy, it rests with this guy. Gets it right, we're back to him being a hero. He gets it wrong, bad things lie ahead.
Well, we could be in a position where he could be a hero. I don't know if he ever started with the hero title, but it is true. Everyone knows the issues at Goldman Sachs. Everyone knows about the misfired forays. And therefore, 5 years into David Solomon's tenure, it's hard to imagine a scenario where if he were to leave today, that people would see it as a glorious run. There has been a lot of dissatisfaction within the ranks. The stock did well through the pandemic. Book value grew really well. But the further we get away from the pandemic, as that boom starts to fade, you can also see in the results, book value growth has not been great in the last 12 months. The stock has really not gone anywhere in the last 12 months. In fact, it's still $100 down from its all-time highs that it reached in October 2021. So what does Solomon have to do to change the perception of his run as CEO? Really prove to the market that this pivot that he's engineered works, will be successful. So if you're looking at it 5 years from now, and if it is successful, then you will perhaps sit back and say, this is the change that Goldman Sachs needed, and David Solomon has delivered that. He's not there yet, but he could get there.
Is it possible to change Goldman Sachs' DNA, I think is the critical question here. And does asset management fit with that DNA? Shri, it was a great piece. Read it cover to cover this morning, Sri Natarajan, joining us. Remember, bank earnings continue this week. We've got some great coverage lined up on that front. Let's talk about the markets as we see them today. Stock 600 a little bit higher today. You've got retail up. Names like Hennes & Mauritz tracking a little bit higher today. But what you've also got is a bond market sell-off. Look at what is happening with the UK 30. We get data tomorrow, so you've got a big move there. We're up by around 10 basis points. Keep an eye on that data. Keep an eye on the bigger, wider move that we're seeing in the bond market once again. Take a look at what's happening in Poland as well today. Donald Tusk is a long-term European politician who has gone back to Poland and has now won, as part of a coalition, the head of a coalition, a big election, and basically pushing out the Law and Justice Party, which has caused so much problems with Brussels. What does that mean? The market is pricing in quite a significant amount today into Polish assets. We'll talk more about that in a moment.